Hello, and welcome to myfinancesteacher.org. Let's start with gold in this video. You've seen this drawing that I did by hand in one of my previous videos, and the meaning of this drawing was that we've had this relatively short intermediate cycle lasting for just over 4 months, although usually these cycles last for about half a year. So since that cycle was relatively short, I wasn't actually sure at the time I made that previous video whether we were actually in an advancing phase of a new intermediate cycle, which means we were likely to see gold going up into the future, or we were still to see another lower low, meaning that we were still continuing that previous ongoing intermediate cycle. Probably turning it into a cycle of a regular duration of around 6 months or so. But as you see yesterday, there was a green candle on the price of gold, which means it looks like gold is actually continuing upwards. And sometime at the beginning of that candle, I actually did post a YouTube update in the YouTube community section. Over here in my community section on YouTube, I posted this update saying that I was entering with a 30% position in my gold portfolio. Sometimes when I don't have time to make a full video, I make these quick updates on the YouTube community post to let you know of my actual live trading. So make sure you not only follow some of my videos, but also have a look at what I post on this community section as well. So make sure you hit that subscribe button. I think if you do, then this community feed will appear as well in your general subscription feed. I'm not really certain about that, but to make that a little bit more of a certainty, you can also hit that bell notification. So I try to update you guys on the actual real-time trading that I'm making. And at the moment, I'm contemplating to increase my exposure in gold, probably from 30 to 60% or more allocation, because at the moment it looks like that the previous intermediate cycle was relatively short, and it looks a little bit more certain that we are in the advancing phase of a new intermediate cycle rather than being in the declining phase of the ongoing intermediate cycle, which started here in November last year. So if that is the case, I'm now probably around 80 to 90% certain that we are in the new advancing phase of an intermediate cycle. Then we are pretty early within the ongoing intermediate cycle. If we ignore this very deep wick over here, if we just go by most of the bodies of the candle, then we've started this ongoing intermediate cycle only on the 20th of March, giving us a cycle that's so far been going on for only 18 days. That's early for both the intermediate as well as a daily cycle. So yes, sometime by the end of the first short-term daily cycle, which generally lasts for about a couple of months, we are probably going to see some sort of a dip in gold price before we continue the advancing phase of the intermediate cycle, probably lasting for at least maybe 3 months. But even though there will be possibly a dip sometime in another several weeks, I want to have a big chunk allocated right now because we are pretty early, even for a short-term cycle. And another reason why I want to have a chunk allocated right now is because that dip might not be a significant one. Looking at the previous intermediate cycle, the first short-term daily cycle over here didn't really give us that much of a dip. So I'm just letting you know in this video, it's actually an advance warning, even better than the immediate updates. Sometime soon, today, I'm probably going to allocate another 30% or more to my gold-related part of the portfolio. And even if this turns out to be a fake breakout from the recent highs in the second half of March, even if we go back quite a lot down into that newer low for the ongoing longer 6-month intermediate cycle, that is still going to be fine. I'm going to have a stop loss somewhere close to 1620. That's pretty close to breaking even. And if we are going to have a lower low, we're gonna reassess the charts later and find another appropriate entry point sometime in future. As you see at the moment, there is quite a lot of volatility over the last couple of months in gold as well as a lot of other assets. So you have to be kind of quick with your decisions, and you have to be able to adjust to market changes pretty quickly as well. So that's my plan for gold, and let's have a look at S&P 500 next. S&P 500 also looks pretty good. Similar to gold, yesterday I did post an update on S&P 500 as well, showing that I was entering with 50% allocation in my stocks related part of the portfolio. That was somewhere at about 2600 on S&P 500. And even though today we see a red candle on the S&P 500 chart, today we are still higher than yesterday's high. So today we have a gap up on S&P 500, and there is a chance that today we are going to close this gap before we continue higher within this daily as well as intermediate cycle in S&P 500. So again, how amazing is this? I'm going to give you an advance warning, even better than immediate updates. I'm going to add to my 50% position, probably add another 20 or 30% to S&P 500. Or maybe even more than that. And I think some of the targets on the upside for S&P 500 for me are going to be this recent low at the end of February, somewhere at about 2850. The next resistance zone and the target for S&P 500 would be this 50-day moving average, somewhere just above 2900. And if that is broken, then the next resistance zone and the target for S&P 500 would be this 200-day moving average, somewhere at about 3000 on S&P 500. I don't think we're going to go that much higher above any of these resistance and target zones because the economy is still in the toilet. Looks like we're just bouncing out of oversold conditions a little bit, but there is a risk that poor economic situation will drag this S&P 500 down again into the future. But in any case, I'm just giving you an advance notice that I want to grab this opportunity to earn a little bit more on S&P 500. And if you are curious on this kind of trades, if you want to find out a little bit more about trading gold-related assets, the general stock market, and crude oil-related assets, as well as Bitcoin and other cryptocurrencies, then you know what you gotta do. You're going to hit that like button, you're going to hit that subscribe button, click the bell for notifications so you don't miss out on these immediate updates, and make sure you stay tuned. Let me know what you guys think on the outlook for gold as well as S&P 500 over the next, say, 1 to 2 months. I'm really curious about your opinion. Share your opinion in the comments below, and good luck in your trades.